Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep dive into our debt service coverage ratio and focus a little bit more on the short-term rentals and how and what we like as far as an occupancy and a market score. So I'll introduce our two very seasoned subject matter experts here in about a minute. We'll let everyone log in. Everything we're going to do here today is 99% of what we're going to do here today is going to be right from our easy to navigate website. We are going to show you the AirDNA tool that you have access to, but everything else is going to be used from our website here today. So let some people log in. This is going to be recorded. Hopefully we'll answer all your questions here today, but if we don't, we'll have your account executive reach out to you, and a copy of this recording will be sent out no later than end of day tomorrow. Give it about another 30 seconds for people logging in. Hope everyone's having a great month. This is the buying season, so we've seen activity pick up and closed loans pick up, and hopefully we'll give you enough intel information here today to feel confident about going out and gathering and getting that debt service coverage investor borrowers. All right, what do we got here? All right, looks like most people have logged in already. So good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I want to introduce in fact, I just celebrated my 10th anniversary this month, guys. So,
right.
Yeah. Want to introduce our subject matter experts. I'll start with Chris, who is our Senior Account Executive out in the great state of Colorado.
Chris Taylor, live in Denver, Colorado. I've been with Angel Oak, I think 8+ years, great years, and glad to be here today.
Yeah, we're lucky to have you, Chris. Thank you. And then want to introduce our other subject matter expert who I get to work with every day, Scott Gruebele.
Hi, everyone. Scott Gruebele here, an account executive down in the Broward County, Fort Lauderdale, Florida area. Have been with Angel Oak since August of 2016, coming up on my anniversary.
Yeah. And like I said, you have two very seasoned, very knowledgeable. So, we'll get to hopefully all your questions. So, but before we get started, I do want to just have a poll here. Let's launch the poll. Who has originated in the last 12 months a debt service coverage ratio program? And so just to kind of throw out a couple of stats here, 34% of the homes in America are rental properties, and 70% of those are actually owned by individuals. So, we've seen a great amount of wealth accumulated by real estate in this country. In fact, the average home across the U.S. has appreciated since 2019, 48.7%. Which is fantastic. So let's see what the poll results are. Wow, this is pretty good. 56% have not, 44% of you have. That's a good amount of people. Usually we run around 70% have not. Hopefully those of you on this realize that have closed a loan, how easy they are to do. So let's jump right into this. Just want to let everyone, this is going to be recorded. We'll get to hopefully all your questions. We have Moses, behind the scene answering questions as they come in the queue. So we'll hopefully get to your questions here. Scotty, you're going to start us off by giving us some of the highlights of our debt service coverage ratio program.
Yeah, absolutely. I'm excited to see that we have an audience that has closed a lot of these. So, I mean, pretty good mix of, those that have not and those that have. So I think there'll be a lot of value as we go through the program. And, the DSCR program is one of the staples in the non-QM space. Non-QM programs, we're known for our bank statement programs, and we're known for our DSCR programs. I believe our DSCR program is one of the most aggressive and versatile in the space, with most of our peers and competitors in the non-QM sector. And we'll go over the different reasons why it is, but it just provides a lot of different flexibility to qualify the loan. So high level, guys, the DSCR loan, debt service coverage ratio loan, is basically a loan whereby for investment properties, there's no income verification, there's no employment verification, and there are no DTIs considered. The loan is basically qualified based on the rental income that that property generates. And there's a number of different ways that we can calculate it. Basically, your DSCR ratio is calculated by taking your rent divided by your PITI or PITIA if there's an association payment. And that's going to give you your ratio. So kind of just lay the groundwork as we go in and once we start discussing how we calculate these. But some features of the program, we go up to a 3 million loan amount, which is pretty cool. So we can fit a lot of your jumbo investment properties. And we do go down to 100,000. On investment properties, sometimes you see a lot of investors purchasing up some smaller properties, condos, etc. So there's a lot of flexibility there. We can do purchase, we can do cash out, we can do rate and term, and I'll also add another one. We can do delayed finance transactions on the DSCR program. That becomes popular because we do see a lot of situations where investors purchase using cash or sometimes hard money just to capture the property and get it off the market. And then they're able to come back to us through the DSCR program to recover some of those funds. Short-term rentals are allowed on this program. We'll go into some more detail on how we calculate that. So short-term rental, there's two ways that we can calculate that. We're going to either use the appraisal if the appraiser is willing to give us those short-term rental comps. In the event, for whatever reason, that appraiser is not willing to or cannot find any, we can go to an Air DNA report. And that's another way that we can use that short-term rental income as well. As I mentioned earlier, there's no income verification. There's no employment verification required for this program. It's all based on the cash flow of the property. And another cool feature is there's no limit to how many properties your buyer owns. So unlike conventionally where there are some caps there, for us, an investor using this program can own 20 other properties. We're not concerned about it. We're just looking at the subject property in terms of qualifying them. Matter of fact, from a reserve standpoint, we do require 6 months reserves on this program, but it's only on the subject. So if your borrower did own those 20 other properties, we're not worried about reserves on any of them, just the subject property alone. First-time home buyers can use this program to purchase an investment property, and here's how we do that. So we have a lot of investors who own an investment property or multiple, but they happen to rent their primary. It's common. And so in that situation, we can see that this individual has owned an investment property before. We can see that they have an experience as a landlord. And even though they might rent their primary, that's fine. We're okay with doing this for that type of investor. So properties that can be vested in LLCs, S Corps, C Corps, and revocable trusts. So vesting is a big, big topic when it comes to investment properties because for many different reasons, tax usually, we see investors that are looking to take vesting in these properties in one of these entities. You will see a lot of our peers may only allow an LLC, for example, but as you can see, we offer many options: LLCs, S Corps, C Corps, and revocable trusts. I'm going to take a quick step back because I think I just realized that might have misspoke or it came out the wrong way. First-time homebuyers are not allowed on the DSCR program. Just clear that up. But like I said, if you rent your primary but you own an investment, you can use the DSCR program to purchase another investment property.
Yeah.
Just a little clarification there.
Yeah, like Scotty, in most cases, we do want them to have a primary, but there are those occasions where they don't. And, so yeah.
And it's starting to become more and more common to see that,
Absolutely.
I've had multiple scenarios where the buyer owns 3 or 4 investment properties, but rents their primary. It's just how they choose to operate. And so we're able to do those. So two really big features that I think are important to make note of and add a lot of value to you as an originator. First, seller concessions. We now allow 6% seller concession on the DSCR program. And as a matter of fact, we offer that on all of our programs for investment properties. So that's really, really big. In addition, we also allow gifts. Gifts are allowed on the DSCR program and on all investment properties on all of our programs. For the gifts, we do need our borrower to come to the table with 10% of their own funds, and they do need to show the 6 months reserves of their own funds. The rest can come from a gift from their immediate family member. So pretty strong when you combine that with the fact that you can also get 6% seller concessions.
Exactly.
Condos, warrantable and non-warrantable, and condo hotels are all permitted under the DSCR program. So you never have to worry about any restrictions when it comes to a condo. And lastly, as you guys well know, there are many states in which you can do what's called a business purpose only loan, where you can do a DSCR loan without being licensed in that state. We do offer the option to do that, and the list of states is listed here in bold that you can do that in. Want to just scroll up a little bit, Johnny, if you don't mind, back to the main point. So as you guys can see here, we can go up to an 85% LTV on this program. That is really strong in the marketplace. What's even better is that 85% LTV can be done on multi-unit properties. So 2 units, 3 units, and 4 units. Single families, townhouses and condos as well. So in today's market, I've actually closed a decent amount of multi-units at 85 LTV, because with the multiple streams of income that those properties are generating, the DSCR ratio is not a problem, right? Single families, condos can be a little more difficult because you usually have an HOA fee, but single families and PUDs, I think as we see pricing rates start to come down a little bit and pricing starts to come down, you're going to start to be able to fit more and more of those properties at 85% LTV. Really strong though when you consider 15% down, no income, no employment verification, qualifying off the rental. That's a really strong program to make note of.
Yeah, Scott, I'm glad you brought that up, because it's something I've just almost forgot about that. So that's really important. And the first question that came in was from Jill. She's asking, it's a great question, for the 85% LTV, Scott, because you kind of just covered this. Is that investor experience required?
At the 85% LTV, it's going to fall right in with our regular guidelines. So no, the investor, if the borrower owns a primary, they're purchasing their very first investment property, do it at 15% down.
Yeah, and a lot of I'll take the blame for it. We almost talk about that. This is for a seasoned investor, but what you just said, Scott, is spot on. This is also for your first-time investors too. So we had our first statement, Chris, and Shonda's on this call, and she says Chris is our rep and he's amazing. So thanks, Shonda. I appreciate that.
Thanks.
And the second, this was the second statement. Investors are not so rate sensitive. Jill asked the first question, has the second statement. As long as it pencils out, and Jill, I'll even say this, sometimes even if it doesn't pencil out, they'll want to get in, and we'll talk about our debt service coverage ratios that we have available to that. So Chris, we're going to deep dive here. So talk about, Scott mentioned it about no employment, on the 1003. Talk about what you want to see, or more importantly, probably what you don't want to see on the 1003.
Sure. And I just want to make a point that when I get a lot of scenarios, I'm being asked more today about the seasoned investor. So it's really nice to be able to say we don't really look at that. But a lot of our competitors must be, because I'm getting that scenario a lot. So on the 1003, so to back up a step, when we do a pre-qualification request and we review that, we look at the 1003, and a lot of times the 1003 has already been pre-filled out and a full doc loan. So we want a really simple 1003. We don't want to have any employment, any income. We do want to see where their primary residence is, if they own it or they don't, and then their REO schedule. And of course, we want to see assets. Again, we don't look at debt to income on this program. We look at the cash flow ratio, the DSCR ratio. So we're not really going to ever look at income. That's one of the reasons why the DSCR loan is one of the easiest loans to do in the business, because we just have that piece away from the process. So again, just basically a basic 1003 is what we're really asking for. And when we pre-approve the loan, we actually look at that 1003 ourselves too.
Yeah, I appreciate it, Chris. Scotty, talk about talk about the credit and talk about the trade lines that we're really, as you and Chris and all the other seasoned account executives across the country are looking at for trade lines, especially for this borrower.
Right, so the borrower has to meet our standard trade line requirement, which is very lenient. We're looking for 2 trade lines for 24 months or 3 trade lines for 12 months. They don't necessarily have to be open and active. Again, we do want to see that the borrower has had one mortgage at some point in the past. So as I mentioned earlier, kind of a little confusion, but to clarify, we don't want this program to be used for a first-time home buyer, somebody that has never had a mortgage before. However, if you own an investment property, as I mentioned earlier, and you have a mortgage on that, that's going to report to credit, that's fine. You rent your primary, or maybe you own a primary, your mortgage is reporting to credit, that's perfectly fine. We also have some situations where a borrower could own a property and have a mortgage that's not reporting to credit. Maybe it was purchased under an LLC, maybe they used private or hard money. That's okay as well. We can ask for verification of the payments on that mortgage, and that's sufficient to meet the trade lines. And then kind of tying that into what Chris was mentioning about the simple 1003, when it comes to real estate owned, I get this question a lot. What do I put on the REO section? Really, we keep it super simple, as Chris said. Any mortgages that are reporting to credit would need to be on the REO section. However, if the investor has any other mortgages that do not report to credit, maybe they're owned in an LLC or an entity or private money, et cetera, those don't even need to be put on there.
So this comes along, Chris, I'll throw this question out from David here to you. Just scroll down, hold on. If vesting in the LLC, S Corp, or C Corp, does the 1003 need to be in the person's name? Kind of what Scotty just alluded to. So, Chris, if you don't mind answering that for David.
And I get that question a lot. And yes, the loan is in the name of the borrower. So, the titling of the property is different. So yes, we would.
Yeah, and the person, we're putting it in the LLC, but the person is personally guaranteeing that loan. So, but it's a great question, David. We get that a lot. Scotty, let's jump into I'm losing my where was that? Sorry.
The DSCR ratio, right?
Thank you, Scotty.
No, and it's important because this is really the meat and potatoes of the program. Yep. So, and this is where I think you will see that the Angel Oak DSCR program really excels in the marketplace and differs from our competitors in the sense that we offer so many different options. So at LTVs that are 80% and above, we do need the DSCR ratio to come in at 1-to-1. That's pretty much industry standard. So 80%, 85%, we want to make sure the rent is covering the payment. However, if you go down to a 75% loan to value, 25% down, we allow the DSCR ratio to go down to a 0.80, meaning the rent can be 20% less than what the payment is. And then to add more flexibility, if you go down to a 70% LTV and below, you have the option of DSCR waiver. So now, regardless of what the rent comes in at and what the DSCR ratio is, that loan qualifies based on the fact that we're doing a 70% loan to value. So to recap, 80 LTV and above, 1-to-1, 75% LTV, 0.80 DSCR allowed, 70% LTV and below, DSCR waiver is allowed.
Yeah, so, Kevin, hopefully that answers your question. And again, we'll talk about how to submit a pre-qual here, but Chris, maybe, go into how, when you do a pre-qual for a debt service coverage ratio, what other tools like outside Angel Oak are you using just to kind of get your head wrapped around where maybe this rent's going to come in?
So if it's a long-term rent property, I mean, I would go to the places where you can see average rents in the area. Zillow is a good one to tell. Sometimes a local realtor can tell you, and that just to get a ballpark of what the market is looking like. Obviously, we have for short-term, we have AirDNA as an option. But a lot of times the realtors, Zillow, rents.com, there's other websites to find rent.
Yeah. So thank you. And then I'm going to scroll back up here. I hope people aren't getting seasick here. But, Scotty, talk about those states for business. Ron was asking about those states. Maybe clarify a little bit, those states and how people who are not licensed in those states, may close loans in those states.
Yeah, no problem. So in the states you see listed there in bold, you do not need a license to originate a DSCR loan with Angel Oak in that state. So if you're located in any other state than these, and you want to originate a loan in that state, you can do so with Angel Oak without having to be NMLS licensed in that particular state.
So this is it, Chris. I'll ask this question to you. Yeah, Rick is asking, can equity in your primary residence be used as reserves?
No.
Yeah.
We have to have reserves as, cash equivalent accounts, brokerage accounts, that kind of thing. Retirement.
And, sorry, Chris. And one of the things that, I usually say during these webinars is, 20 to 25% of the loans that close here at Angel Oak don't meet our guidelines. And reserves is one of the ones at the top that is usually, I want to say, negotiable. So, but like Scott said earlier, we're not requiring any tax returns. We're not requiring, lease agreements on other properties. If they own other properties, we're not requiring reserves on those other properties also. So, I think this is a pretty easy, I think Chris Barker in South Carolina calls it, a bulletproof loan, because the Scott went through, your LTVs, even for no DSCR. That's pretty flexible, and allowing gift funds too.
Yeah, I think the reserves, as you mentioned, John, if it's a good loan, we're not going to lose the loan if we're short, a couple of months or a few months on reserves. We're usually very flexible on that.
Yeah. And so Rick, hopefully that answers your question. Sergio, we're going to hopefully touch, we're 20 minutes into this. Hopefully we will talk about foreign national. So we'll get to the foreign nationals within a few. So Chris, talk about prepayment penalties, if you don't mind.
Sure. So within the states that allow a prepayment penalty, we require a prepay. Our standard prepay is usually a 3-year. However, we do have adjustments for up from 4 years all the way to 0. A lot of times I see a 2 or 1 year prepay on the loans that I'm working with. And then the ones that are 0 prepay are pretty expensive, but it is an option.
Right.
So.
We answered that. Hold on. So Scott, you touched on the LLC.
Mm-hmm.
Is there any seasoning on that? How many people can be a part of that?
Yeah, that's a good question. So when vesting in the LLCs or the corps, quite often they're brand new. That's actually the norm, right? It's a brand new LLC, a brand new corp that it was just established for the purpose of taking vesting in this transaction. So we're perfectly okay with a brand new corporation LLC, and it doesn't necessarily have to be open in the state that the property is located. It could be open in a different state. We're okay with that as well. If it is an established LLC, we're okay with that as long as it is established for the purpose of owning real estate, meaning, if the borrower owns a restaurant, you can't take vesting in the same LLC that the restaurant, right? It's got to be designed strictly for or open strictly for investing in real estate purposes.
Yeah. And then another question here, Chris. If you have 2 borrowers, whose score are you going to use for grading purposes? And
we're going to use the middle score of the lowest scored borrower.
But on our other programs, we will use the higher. So just want to make sure everyone's aware of that.
But again, keep in mind, there's no income and no employment verification. Right. So if there happens to be a borrower that has a lower score and you don't necessarily want to use that score, we just leave them off the loan. Yeah. And as long as the assets are coming from the borrower that is on the loan, we're in good shape. Maybe they're married, and maybe the assets are in the individual's name that you don't want on the loan because they have a lower score. That's fine. As I said, we can take a gift. So there's a lot of different ways that we can look at this and structure it. And that's where working with your account executive will come into play.
Just took the words right out of my mouth, Scott. We kind of have a saying internally, like your AE is your confessional booth, right? Give them all the stuff. and you can already tell by Scott and Chris and all of our other county executives that are so seasoned, they're going to work with you up front to get these done. You know, even if they're not 100% sure if this loan is going to close, we have a help desk that we go to up front, and you know, that exception will follow that loan throughout the entire process.
I would even say that half of the loans that I get in are usually loans that have failed somewhere else, and a lot of times it's really the pre-approval process or the AE that could have made a difference.
Right.
So, you know, we're flexible up front. We can go and get an exception up front without it going to underwriting. We have those capabilities.
So Chris, you're talking about everything up front. Will you do a pre-qual on a TBD?
Yes.
Yeah. And then, Scotty, you talked about, you know, the type of transactions, purchase, refi, cash out. You know, like I said, I was looking at one of your deals earlier today, and it was a cash out on an investment property, right? And you know, and then Scotty, do we allow this on 1031 exchanges?
We sure do. We allow 1031 exchange funds to be used using the DSCR program. As you mentioned, John, we allow cashing out on an investment property and using that cash to maybe purchase other investment properties. And then there's rate and term as well. A lot of times, like I said, rate and terms we're usually going to see when somebody's trying to get out of a hard money loan and they're refinancing into a DSCR. Kind of 2 points I want to touch on, because Chris, you mentioned the point about the pre-approval and how you're reviewing everything up front. And I think this is important because it really, in today's marketplace, it differentiates working with Angel Oak as opposed to most other non-QM lenders, is the fact that your account executive is reviewing every single loan that comes in the door. That's unique to us. We do a pre-qualification. The way I like to always explain that is to kind of relate it to conventional terms. We're reviewing the 1003 and the credit in the case of a DSCR, and we're sending you back our findings. It's our equivalent of a DU or an LP, approved, eligible, accept, right? You can't submit that loan conventionally without that eligible, accept, approved, eligible. Same here. We're reviewing the credit, the 1003, we're doing a pre-underwrite for you, and we're sending you back our findings with terms, pricing, an entire sheet that shows pass and fail, everything you need to proceed with that file. So you can feel confident that when that loan gets submitted to underwriting, it is going to close. If it doesn't, it's usually something that's out of my control or your control as the originator. But that is a differentiator in the industry. There's not many other non-QM lenders that offer that ability.
Yeah, thanks, Scotty. Appreciate that. Jesus is asking, Chris, I'll ask you this question. Can a borrower take equity loan from another property, secure down payment and reserves? And is there seasoning on that?
Yes, they can do that, and there's no seasoning that I'm aware of on a home equity loan. So, and we do offer, by the way, home equity loans, just so everybody knows, and bank statement home equity loans. So, thanks for asking.
You just mentioned seasoning too. So, good important point, guys. We only require 6 months of ownership to do a cash out refi off of the appraised value on all of our programs, including the DSCR program. That's a big one.
Yeah, and that was my next question here, Scott. So thank you. Good plug on the HELOC, Jill. Okay, Jill like that too. So Chris, so Scott, you touched on number of properties, and these come in multi-packs usually, right, Scott? Usually when it's cash outs and stuff like that. Talk about the number of properties again that will Angel Oak exposure, but again, it's another big exception too.
It's very common. So we have no issue with, you know, how many properties the borrower owns. If the borrower comes to us and they want to do a DSCR transaction, like I said, they own 20 other properties, that's perfectly fine, right? We have a limit of usually about 3 million total loans we'll do for any individual borrower, but frequently these DSCR loans come in packs. I have one borrower right now that actually has 7 loans in process with us, all DSCR cash out refis for investment properties that he has owned for many years, and he's going to tap into the equity. I assume he's going to invest into some other properties. So that kind of gives you an idea.
Yeah, Chris is. I think Chris wants to say something to you, Scott, about that, but you know, we'll keep it. Chris, how, these are really easy to, not easy to pre-qual, but easy to pre-qual, easy to underwrite. How quickly have you seen some of these loans close, Chris?
Definitely all of them under 30 days, most of them. But I mean, gosh, I've had some records, maybe a couple weeks, especially the ones that come in with appraisals. We've also been able to look at that appraisal to know if it qualifies. So it goes very fast.
Yeah.
So we're definitely cruising along here. A lot of questions are being answered. Thank you, Scott. Thank you, Chris. Scotty, let's talk about Air DNA.
Yeah.
And did this screen just change to the Air DNA?
It did. Yeah.
Okay. Thank you.
So let's kind of do a prelude. So let's talk real live action, guys, right? And tips and tricks. Real live action is, the fact of the matter is, and it's important for an LO to have this conversation with the borrower, is that none of us, borrower, a loan originator, account executive, or lender, knows what that rental income is going to come back on that 1007. We can prognosticate as much as we can. We can use realtors to pull some comps from us from MLS. We can use Zillow. We can get an idea of what the market rent is for that property. But the truth of the matter is, it's all contingent upon that rent schedule, that 1007. So when that 1007 comes in short, what happens? Well, that's the meat and potatoes. Really, that's where your account executive will work with you, because we have so many different options to get that DSCR ratio or that loan to work. One of them is going to be Air DNA. So if we can pull basically short-term rental comps on any property by going to Air DNA, we're going to simply plug in the address that John has done here, and you're going to see that it's given us all of the data on this property. What we're looking at is for an occupancy rate, as you can see right in the middle, to be over 65%. So in this case, this property has a 67% occupancy rate. And then we're looking for the overall score, which you can see there, which is, I believe that's 85, John. It's a little hard to see.
Yeah, Scott, it is 85%.
We're looking at for that score to be 70 or greater. If we have those two numbers, we're taking the projected revenue of 76,600 and we're dividing by 12. And that's the rental income we're using to qualify that particular loan. So if for some reason the short-term rental comps are not getting us where we need to be to make that loan work, we can always pivot and use Air DNA and use short-term rental comps, right? There are other tips and tricks as well. For example, we offer interest only on this program. If the DSCR comes in and it's not meeting where we need to be, we could always add the interest only feature. Obviously, there's a loan level pricing adjustment to use it, but now we can use the interest only payment to calculate that DSCR ratio. There's a lot of different ways that we can work to make these loans work. Again, it's just important that the originator and the borrower understand, look, this qualification is ultimately based on this rent schedule when it comes in, and there could be things that change, so just be prepared and be flexible.
Yeah. Yeah, and there's a lot of different ways to close these loans, Scott. Like you said, Air DNA. I will say something about Air DNA, and a few of us have been talking about this lately. Dependent upon the city, the zip code you're trying to get into, it used to be a free, and you could just see this. There's a couple of options. There's a market research, a revenue calculator, and one's for sale. They've kind of wised up. This area of Texas doesn't require that, but earlier today I was looking at some highly coveted areas of the West Coast, East Coast of Florida, and they have you have to pay for a program, and the basic program is like $15 a month. So I'm not plugging Air DNA here, but if that's a big part of your business and your market, it might be worth investing in it. So just as a FYI there. Chris, anything else regarding Air DNA or rent comps or anything like that?
Not that I can think of, but just, that occupancy score is important. Definitely is important. And it's good as an investor to look for that too.
Yeah. And Yoli, hopefully I'm pronouncing your name. We're going to run a quick quote here, but we have enough time. Scotty, let's go back to our website and let's just highlight some foreign national. Why am I not getting to this? Let's highlight some foreign national and just talk about what program it really resides under too. So.
Yeah, absolutely. The foreign national program resides under the DSCR program. It's the easiest foreign national loan you'll ever do for those of you that do these. It's very popular in my marketplace here in South Florida. Because we do it under the DSCR loan, as there is with the DSCR loan, there's no documentation required from the foreign national, meaning no income from their country, no employment from their country, no credit from their country, no accountant letters, reference letters, etc. We, on a foreign national, we're looking at basically two items: the visa, if it's a country that requires one, and the assets. And that is literally it. If they have the visa that's required, if they're in a visa required country and they have the funds to close that we're looking for, plus the reserves, which we'll go over, they basically qualify as long as the DSCR ratio comes in at a 1-to-1. So that is a requirement on the foreign national, just like our DSCR loans that are 80% and above LTV. We do need the DSCR ratio on a foreign national to come in at 1-to-1. Assuming that's the case, we can do a 70% loan to value, so it's 30% down. We do require 12 months of reserves. So it's 30% down, 12 months of reserves. Those are both pretty standard in the industry for a foreign national loan. And with that being said, you can go up to a 1.5 million loan amount on the high side, or you could go down to 100,000 loan amount on the low side. Most of the features we have on DSCR do apply in the sense of you can close in an LLC on these. That's pretty strong for nationals. Let's see, we do set them up with an ACH auto payment to make it a lot more convenient and easy for them to make those payments. And as you can see right here on the website, we list all of the eligible visa types if they're in one of those countries that does require a visa. One important note though on foreign nationals, it does have to be their funds. For this program, for foreign national, we don't allow gift funds.
Yeah, Scott, good overview there. You know, one of the tips and tricks, you know, I've heard from you guys that if they are sending money over, you know, maybe send a little extra just in case it doesn't ratio and have to put a little bit more down because of the 30 days in the FDIC bank here. So, you know, if they don't have enough, that 30-day clock will start clicking over again. So, and then Chris, someone's asked a question here. What if the borrower doesn't have a FICO for a foreign national?
Oh, for a foreign national, we don't look at credit. So
yeah. So I know Scotty covered that earlier, but I think some people, we used to have the manufacturer credit, the you know, bills, no credit score on the foreign national. Just want to make sure we're clear on that. And you know, we're going to talk about our marketing portal in a couple minutes, but you know, if you're really thinking about how to market yourself different from everyone else in your market, you know, with all this geopolitical strife all over the world, a lot of people send their children here to universities. And, you know, so if you live and market around a large university, this might be a good outlet to try to market yourself a little differently to larger universities. So just FYI there. Chris, let's go back to the homepage and tell us, you know, how to get a quick quote. A lot of people asking about rates. How to submit a pre-qual.
Sure. And you know, before I say that, a lot of times I'll get an email. I want login information, and I always try to explain. You know, you can work with our system without logging in from an iPhone. We make it really user friendly, so you can price out a loan and get basic guidelines within 30 seconds. So we're going to go through how to look at a loan pricing and the guidelines. It's just really simple. You go to our website and click on the non-QM quick quote. This is something we've had for years, and we've modified it and made it a lot easier to use. But anyway, if you know, John's putting in the numbers right now. We're doing like a $500,000 loan, 740 FICO. You know, put in the approximate LTV. There's nothing in here that you can really do wrong. And you can change and modify it as you go. In this particular case, I think we could do the DSCR loan. And keep in mind a couple things with the DSCR loan. We want to know if you're licensed in the state. We want to know the ratio that you're expecting. Those are two things so that you can get an answer from us. And the basic prepay as well. And if you page down, there should be a program that we're offering you in a basic interest rate that you can keep in mind, it's a working document. You can change the LTV, you can change the FICO, you can change the DSCR ratio also to find out what the pricing adjustments are. Over on the right-hand side, you can view rates and you'll see the pricing schedule, and you can look to see what kind of premium is available. Let's say, I don't know, you're 7.5 here on this one, which is, that's a great rate. At par, maybe you don't want a 3-year prepay, maybe you want a 2-year prepay. You can go back, change that, and you'll see what the difference is in pricing. Or maybe it doesn't ratio it 1-to-1.
And Scott, I mean, not Scott, Chris, we're even allowed to a 5-year, and you look.
Oh yeah,
look,
that's true.
It'll change the pricing, or for 4 years, still change pricing. So there are options out there, and it's just quick as easy as what I just did. Took not even, 2 seconds, and we have an AE in Tampa, St. Pete. He's got an 8-year-old daughter, and he says she runs scenarios on here. It's that easy. So
yeah. Always remember to go up to the state section to make sure if you're licensed or not, because we do offer the non-licensed states now, and that's it. And sometimes you won't get an answer, and that's one of the reasons. So
yeah. So Chris, so we got our rate. Is this locking the rate at this? Is this locking the loan at this time, Chris?
So the next step in the process is to send us a pre-approval request. So we want you to select a rate, and you're not stuck with that rate or locking it. So you would select that option, and then you're going to page up, and we prefer to have your 3.4 file if you have it. Great. You don't have to have it, but it does help us through the process. So you would just drag and drop that there, click next. And the cool thing about a DSCR pre-approval is all we really want to see is your 1003 and your credit. Mm-hmm. So you're going to choose your account executive, the company that you're with, the basic information about you, and then you're going to drag and drop your 1003 and your credit report. Sometimes you might have an appraisal. You can drop that into the additional documentation section, or anything pertinent about the loan. Maybe we need to request an exception. Keep in mind, when we request an exception, it goes to a VP of credit risk. So it's been blessed. When it's approved, it's approved. That's the good thing about our pre-approvals. When we ask for an exception, it's been reviewed before you have to disclose the file, before you have to send it to underwriting. It's looked at by a very high level credit risk person.
Yeah, so Scott, question here from David. Sorry if he missed this, but are all of our loans priced borrower paid compensation?
No, it's going to be based on what you select in the previous screen. Chris just mentioned all the drop downs that you go through. You would have noticed the last drop down there was where you would select borrower paid or lender paid compensation. So you would just need to know what your lender paid comp plan is for your company, for your organization. And then it's going to ask you to input what that plan is. And then when you hit that see rates button, then you're going to see all of the pricing with your lender paid comp plan built in.
Yeah, and that's it. But I think, what are you seeing, guys? I'll throw this out to both of you. What are you seeing most of your people going these days? Are they going lender paid, or are they going borrower paid?
Well, sometimes it depends on the transaction. Like if it's a builder loan, for example, or where there's seller options, they'll go a lot of times borrower paid.
Yeah, that's what I feel.
Yeah, I'm seeing mostly borrower paid in my market. It's such a competitive marketplace out there. I've noticed that when you go lender paid, because it increases the rate so much, you're building that comp into the rate, kind of takes you out of that competitive pricing standpoint. So for the most part, I see borrower paid here in South Florida.
Yeah, and I'm seeing it all over. I'm here in Texas, so I'm seeing it even here, Scott. So David, hopefully that answers your question there. So we've gone through DSCR, we've gone to foreign national, we showed everyone their DNA. Again, this is being recorded, so we'll get this out to you before end of day tomorrow. Scott, let's talk about, we talk about how we serve, and it's on the front of our website, how we serve, an underserved borrowers, right? And, this is where I'll get on my high horse here a little bit. Let's go to our marketing portal, which I feel is an underutilized portion of our website. So Scott, let's talk about how, and again, I'll shake my head. I believe it's such an underutilized portion of our website. So
It totally is. I mean, we're giving you the tools to basically market these products and programs for free and go find these borrowers. So if you go to the login section there, John, if you can show them how to log in to the portal, or you already have one logged up.
I already have one logged in.
There we go. So this is our portal. So as Chris mentioned, think of it as two different sides, guys. The front end is going to be the pricing engine we just went over, where you would price out your loan, upload your docs, submit it to your account executive. By the way, after you click that submit button, a notification comes to your account executive. We now know you've submitted a pre-approval, and we're going to turn around that pre-approval to you, usually within 24 hours. Literally, it's that simple. You guys, would it take 2 to 3 minutes for you guys to go through that scenario and upload docs and submit it, and boom, that's it, it's done. Within 24 hours, you have a pre-approval on your hand. So, but now that's the front end, no credentials required. Here, to log into the portal, here you do need credentials, because this is where not only is the marketing portal housed, which is for our approved brokers, but this is where you're going to upload loans, request disclosures, upload conditions, etc. So in the marketing portal, as John hovers over that, you're going to see all of the different sections we have and all the different tools we offer to an originator. We'll start with the flyers at the top. Every program we offer, obviously we're covering DSCR today, so you'll see the DSCR flyer is there. But as we're doing that, you can see that every single program that we offer has a flyer that you can 100% customize and white label with your contact information, your logo, your pictures, and it's got all of the details of the program based on how we do it to our guidelines. So as you can see, this was a gentleman from Prime Lending, Myron Hackman, who customized this flyer last. Picture there. This looks like a flyer he went out and designed and put together, but all Myron did was hop into our portal, put in his contact information on the left, drag and dropped his picture and his logo, and boom, he had a flyer made up that he can now take, market to referral sources, realtors, et cetera, or maybe market to, you know, borrowers and so on. And then you can obviously hit the drop down and select the flyer for any of the programs we offer.
yeah, Scott, and then Myron doesn't have to go in and fill out anything else. He could just print out these or copy and paste them and send them to, like you said, whether it's realtors, borrowers, or whatever. So
blast email them, however he wants to market it. Yep. If you go back to the marketing portal there, John, we'll go over some of the other tools we have. So presentations. This is one I highly recommend everybody on this call download. We offer 2 different PowerPoint decks that are designed to help you all present these products and programs to your referral sources, your realtors. There's a short term and then there's a long form. There's also a flyer that you can use to promote an event. So let's say you wanted to get, you know, a room full of realtors, and I have many of my LOs that use this exact PowerPoint. You can basically download this flyer, put the date of your event, location of your event, get it out to all of your referral sources, all of your realtors, promote the event, and then you can use this PowerPoint deck, which is again 100% customizable. You can white label it right down to your own colors for your organization. You can put your logo on every page. You can even edit the information page by page that's on there. So now when you go to do your presentation about non-QM products and programs, you have a professionally put together PowerPoint deck, fully customized with your look and feel, logo, and contact information that you can present with to your referral sources. And the best part is you save it, share it within your organization to as many LOs as you have, and everybody can now use this to go out there and do these presentations.
yeah, Scotty, give it, you know, I should have brought up the one that from your customer, but kind of inform the group here of what they did, not just presenting non-QM, but their other programs they have available to them.
Yep, I love to use Premier Lending as an example because these guys probably use this presentation out of my clients the most. They took it, they customized it page by page, and as I mentioned earlier, because you can go in and customize every page, they basically kept all of the non-QM information, but then they went in and they added some of the other stuff they offer, right? They added their down payment assistance programs, they added the Hometown Heroes program, they added a lot of other programs that they offer conventionally or through other lenders into the presentation as well. So now they have this well-rounded, beautiful put together presentation where they're leading with non-QM, because let's face it, that's what gets people in the door. That's what packs the room. And then they're able to kind of present everything else that they offer in the process.
Chris, jump in here about, I know Scott does them all the time. I know you do these all the time. I mean, tell me about like an aha moment, or just.
Well, I would just say also, we offer to go in the field with you and give this presentation. We'll even, bring some food in, and we'll try to make it fun. A lot of times I'm just like the investor behind the scenes, the investor that's supporting the loan officer company and the industry expert. So we can be whoever you want us to be. We can say we're from Angel Oak or not. We're just there to help you. The one thing I have learned in these presentations, especially with groups of realtors, I could almost guarantee you will get one loan out of it from one of those realtors, because realtors are really our number one customer. They believe in this product, and once they've funded one, they've become a believer. So
Yeah, it's so well said, Chris. Yeah, and I think one of the things, that gets people a little nervous, sometimes you don't want to present programs that you don't know it, say, as well as Scott or as well as Chris. As Chris mentioned, they will go in there on your behalf. They don't say anything about Angel Oak. I'll use Jill, for example. Jill's asked and made a couple statements and asked a lot of great questions. So I go in, Chris goes in, presents on Jill's behalf and says, I'm just one of Jill's investors. We're going to just talk about other programs Jill has, but we're just one of Jill's investors. And after Chris talks about the bank statements, the DSCR, the HELOCs, the full docs that we have, he's always going to say, what are you going to do when you have a borrower or a buyer like this? You're going to refer them to Jill. And that's all Chris, Scott, and any of our other account executives across the country are going to do. So I believe it's one of the most powerful presentations you could give to your referral source. And as Chris said, they're going to get glazed over, those realtors, because they're going to be like, oh my God, I could have done a loan like this. Or I had a loan fall out where the borrower couldn't qualify using tax returns and we took them bank statement. Or I have an investor that is over the 10 properties financed, and he or she doesn't think that they can get any more properties financed other than going to hard money, right? So I think that is, and then Scotty, let's flip back to the portal here and just talk about your huge social media. You're an animal on social media with you and your clients. Let's talk about the other part of the portal where we have our social media
posts. Yep. I like to post a lot on social media to get a good reach and touch a lot of people. So we've offered basically same exact thing here. These are all pre-made, literally as easy as possible for you as an originator to put up a post about a DSCR program, or maybe a bank statement program, or maybe a HELOC, right? Whatever you want to post about, we've even broken them down by the different social media sources. And we have a document already put together where you're just copy pasting. So you have the photo or the image for your post, and then you could use some of the verbiage we pre-canned for you, copy paste that, or you can obviously add whatever verbiage you want to. The point is, we're giving you the tools to market these products and programs literally at just the click of the mouse. Within no time, you can have a post up about a DSCR program today geared towards borrowers, and then maybe tomorrow, within a few clicks, you can have a post up about a bank statement program geared towards realtors, right? It's right at your fingertips, and it's free just by being an approved originator with Angel Oak.
Yeah, I think it's, and again, don't take this the wrong way. I hope everyone on here really tries to do this today. Don't wait, I'll do it next. I'm telling you, it's powerful. And the Mortgage Bankers Association is saying, 2024 is going to be 23% over 2023. Well, I can tell you non-QM has grown way bigger than that 23% over 2023. So, and it's not, it's those savvy investors, those savvy self-employed borrowers that are really still moving forward. And as Jill mentioned earlier, those investors really aren't as rate sensitive as you think they are. So I appreciate that comment earlier, Jill. I know we're getting to the end of our presentation. Chris, anything in closing you want to share?
Just again, if I'd say a good portion of our loans don't fit our own guidelines. So it's not always a black and white business. There's always a scenario, a story behind a loan. Scott and I, and Scott especially, we have a lot of experience to help you put a narrative together to submit an exception request. If you're having trouble with another, of our competitors, we're here to help you. We're also here to help you, expand your own marketing with these non-traditional products. So I would just utilize us, definitely.
Scotty, anything else in closing?
Use and abuse us, I always like to say. To your point, John, about pricing, and I think it's an important point to hit on. So I'm quite frequently hearing this, our DSCR program and investment properties in general, even if it's on a bank statement program, is pricing just as good, if not at certain LTVs better than conventional, because of all of the LLPAs that conventional has added to second homes and investment properties. You will be blown away, guys. Make sure you're using that non-QM quick quote. And if you have an investment property, price it both ways to see which makes more sense for your borrower. A lot of times you might see a rate that's similar, but it's costing a lot of money on the conventional side. And with us, it's a par rate. But I'm getting that quite frequently. So definitely check it out. Get with your account executive. As Chris mentioned, none of these loans are black and white. They all have a story. Reach out to your AE. We're your conventional booth, like John said. Tell us the story behind the loan, and we're going to help you structure that loan in a way that's going to get it approved and through our door. If it works, great. We'll put it together. If it doesn't work, we'll let you know that loan may not work with us, but we'll always be upfront, and you're going to get that quick, honest answer.
Yeah. Yeah, thank you, Scott. A couple of people were asking in the question queue, who's their AE? I just shared, hopefully with everyone, my contact information. If you want to, I gave you my cell number, I gave you my email address. If you want to contact me, I'll get you quickly with your account executive. It's not one of these two experts here that you guys got to see today. So, Chris, thank you very much. You're a pro's pro. Scotty, I love working with you, man. It's an honor every day, and I appreciate everything that you've done.
Thank you.
Love you too, bud. Hey, this is recorded. We will get this out to you before end of the day tomorrow. It was exciting. You guys had a lot of great questions here. I love seeing that 44% have originated a DSCR loan. That kind of warms my heart, man. I love hearing that. That's the biggest number I've ever seen, and we've been doing these webinars almost going on 4 years. So congratulations to all of you. And if there's anything, for those of you who have closed loans with Angelo, thank you very much. For those of you who have not, you can see the type of talent and people we have here at Angelo. Please give us a chance. Have a great rest of the month. I think tomorrow's Flag Day. Have a great
Father's Day, Sunday, to all the dads out there.
Yep. Happy Father's Day to both Chris and Scotty. Wish you guys the best. And hey, thank you for participating today, and have a great rest of your month.
Bye.
Bye-bye.